Hey, it's Bryan over at Cross Country Mortgage. Hope you're having a great start to your week. Had an interesting weekend and we had to put out a couple fires from a few clients, and I thought that today would be a great time to share the 5 things to never do when you're in the mortgage process buying a home. So these are the top 5 things that you should never, ever do once you're in the mortgage process, or you will jeopardize buying the home that you've invested time and money and energy to get. So first off, I had a great client over the weekend share with me that they're contemplating getting a new job. And I'm happy they texted me like I asked them to, because had they taken that job without speaking with me first, they would not be able to close on their new home. So I helped them understand how to move forward with that so that they could still buy the house and still be able to take the job. So, I don't care if you're getting more money or I don't care what the opportunity looks like. I want you to be able to take the opportunity and make more money or have a better work-life balance or higher quality of life at work or whatever that looks like for you. I want you to be able to take advantage of that opportunity. But if you're in the middle of buying a home, please avoid moving jobs. If you do, the minimum wait period, let's say you just take the job and you don't talk to your lender about it. For us, it's a 30-day wait period. So we basically need 30 days of pay stubs from the new employer before you can be approved in underwriting, and then you can go to closing. So it's really about a 5 or 6 week process from the date that you take a new job. Most sellers are not going to be willing to wait an additional 5 to 6 weeks if you're already in the process of going to closing. So number 1, do not take a new job. If you have an opportunity, call your lender. Please speak with them first. Otherwise, you'll be causing yourself a lot of grief. And the earnest money, the home inspection, the appraisal costs, all those things that you put time and energy and money into, they'll be lost more than likely. Number 2, don't co-sign on any debt for anybody else, especially if you're in this process. So if you have a relative, most commonly, that needs help with either a mortgage or a car payment, or maybe they want to try and build credit and then you're going to be a co-signer on a credit card for them, don't do that. It will be 100% counted against you unless you can prove that you don't pay that debt. And the only way to prove that you don't pay that debt is if I have 12 monthly statements for the last 12 months in a row showing that the other person that you co-signed with made the payment on that debt without it coming out of your bank account. It must come out of their bank account. So in other words, if you co-sign on a mortgage for somebody else, I need to see 12 months of payments in a row coming out of the co-signer's bank account, out of their own funds, and we have to prove that they were paid on time as well in order to not count that against you. So that's a lot of documentation. Most people are not going to have that documentation readily available, so that takes more time. So I don't want you to think it's not possible. If you have co-signed for somebody, it absolutely is. It's just more documentation. So in the process, when you're under contract going to buy a home, don't co-sign on any debt for anybody else. Next thing we don't want you to do is we don't want you to miss any payments. It's very common especially in a refinance, to think that it's okay to not make the mortgage payment because we're closing on whatever date the lender told you. Well, you got to have clear communication before you don't make that payment, but we always advise make the mortgage payment in the month that you're closing regardless, unless we give you different instructions. If you're going to close on a purchase of a new home and you're trying to conserve cash and you don't make a car payment or a credit card payment or whatever it is, that's going to hurt you. What we're doing throughout the process from contract to close is we're monitoring your credit all the way until the date of closing to make sure nothing's changed. So if you don't make a payment and potentially go late on that, that will show up. That could negatively affect your mortgage approval. So always make your payments on time. Fourth thing, don't open new debt. So I know you've got, you're super excited, you're under contract to buy this new home, and you guys walk into Lowe's and you see these great kitchen counters and they're, free interest for 24 months, and they're on sale, they're 25% off, and it's this weekend only. Sounds awesome. The problem with that is they're going to ask for your social security number, and you're going to have a new credit card, a new revolving debt on your line, on your credit report that will be showing 100% used when you open that store card at Lowe's. So if you do that, understand that now we have to count that debt against your debt to income ratio. We have to show proof that that account was created, and we got to get a copy of the first statement from the lender. So all those things cause more delays, and it could potentially deny your loan depending on what your debt to income ratio looks like prior to opening that debt. So what is best practice? Don't let anybody pull your credit for any reason, whether it's to open a new debt for you or to co-sign on a debt for anybody else, like I mentioned earlier. And then fifth, I think this is probably the most important thing. This is what happened over the second thing that happened over this weekend is don't spend the money that you have in your bank account that we're using for your mortgage approval and underwriting. So when you get approved for a mortgage, there's a certain dollar amount that you need to show that you have in liquid assets so an underwriter can give you the approval for the mortgage. When you go to closing, you're going to spend less than that. So we have to show your total amount in the bank in liquid assets, but then we know you're going to spend less at closing. So let's say you need $15,000 in the bank liquid to be able to be approved in underwriting, but when you go to closing, you're only going to spend $10,000. You know that. But what unfortunately happens sometimes is people start spending that money because now they've supplied us with the bank statements. And if we have to verify anything else and that balance goes down, we have to use the most recent and the most up-to-date bank statement and balance documentation. And if it goes from 15 down to 10,000, well, now you're short $5,000. So if you need 15,000 in this example to close on the home to be approved in underwriting, do not spend any of that money until after closing. Otherwise, you will potentially jeopardize your approval in the mortgage process. So all 5 of these things, they will cause delays. They will cause anywhere from a 1 day to a 3-week delay, depending on the issue, if it's even resolvable. Sometimes you will be straight up denied. So best practice, don't do these 5 things if you are serious about buying the house that you're under contract with. And if any of these things pop up or you need to do something like this for whatever reason, please communicate with the lender and call them first before you do anything. If you have any questions about that, don't hesitate to reach out to us. You can give us a shout at our office. It's 847-603-4778.